Good morning, everyone. I hope you're doing very well. My name is Lucas Miller, and welcome back to Fear Free Passive Investing. Thank you so much for being here. I really appreciate you tuning in today. Of course, it's June 5th, which is Fridays. We're going to do our Friday Five, where we talk for 5 minutes, give or take, about things regarding commercial real estate. And today's show actually comes from a listener email. Someone emailed in and I had a question, and I was actually just going to respond via email because I didn't think any differently, I guess. But I actually just decided to turn it into a show because I thought it was a really good question, and I've got it a couple times before. And the question actually surrounds what is the timeline of the multifamily transaction in a syndication, and where exactly the money comes into play. Like, at what point in the timeline does this person wire? And I thought that was a really good question. And so we're going to talk about it today. Okay, so to start, we're going to do a caveat. You guys know I love caveats. This is a very difficult industry, so we got to make sure we put caveats in because there's so many different variables that can affect a transaction one way or another. But we're going to talk about a generic, vanilla, multifamily syndication and something that I have experience in. So I'm going to stick to that. But the caveat is, like, there's a whole bunch of different types of transactions. You can do a blind pool fund, you can do a recapitalization, you can do, not a syndication. There's a whole bunch of different things you can do. But this specific question was talking about a multifamily passive transaction that they were interested in, and they were going to wire money, but they didn't know, like, basically when it was going to be put into the deal. So to start, we're going to talk about just a general timeline, and starting with finding a property and putting it under contract. Now, that's skipping a couple steps, but none that really impact a passive investor. So once the deal is under contract, that's when we begin our due diligence process. We, meaning the general partners or the sponsors. And we start our due diligence process by doing property inspections, by doing financial audits, by doing rent roll audits, by doing lease audits, all kinds of due diligence items to make sure that what we are purchasing is what we think we are purchasing, what we expect to be purchasing. Um, Meaning we don't really want to have any big surprises. Now, all of that, of course, costs money. It costs money to get the deal under contract through earnest money deposits. Um, Somewhere around 1 to 2% of the purchase price you can expect to put down as a earnest money deposit. Sometimes it's non-refundable. Very likely that it's going to be non-refundable at some point in the transaction. So making sure you have that money, that's for the general partners, the sponsors, to worry about, not for the passive investors. And then the due diligence costs, of course, cost money. Loan applications cost money. So we have all these upfront costs that the general partners handle on their own. And this person, I am reading between the lines, but they basically wanted to make sure that we weren't using passive investor money to use as what we call risk capital, money that wouldn't be returned if the deal fell apart. And so, that's a totally valid concern. We've never really talked about that before. The money that we would be out if a deal fell apart. And so we do all that due diligence. We spend all that money up front, and then once we decide we want to move forward with the purchase, we create the legal documents surrounding the syndication process. We make sure we are up to snuff with all the legal issues and hoops we have to jump through that our lawyer takes care of us for. And it is at that point then we send out the offering and start raising money for the deal. Now, I want to be very clear. We don't raise money for the deal until we know it is something we want to purchase. That is, meaning we've gone through the due diligence process. There's no big surprises that we can see. We've done the best of our ability to make sure that this is something that is going to perform well. And at that point, then we will start raising money, but not before then. And so, to answer this question in a very long-winded way, you don't put your money into the deal until we have created those documents and we are raising money for the equity down payment or rehab costs or whatever the capital stack looks like. Once the money is being raised, it's a very high likelihood that the transaction will actually go through. And so if it doesn't go through, of course, we could send your money back. You wouldn't be out that money. It's not like a non-refundable investment. So I hope that was helpful. If you want a whole video about it or a whole podcast about it, I'm happy to talk about it and go really in depth and talk about all the various steps we go through. But I feel like for most passive investors, that's not really something you would want to know for sure. At least probably not the majority of you. But anyway, if that is something, let me know. Thank you so much for emailing in the comment and the question. If you all have questions or comments, feel free to email me. My email will be down in the description, or if you're listening on the podcast, it'll be down below. You can definitely email me and reach out, send me questions to ask me. If you don't want me to do a whole show about it, you just want a private answer, I'm happy to do that too. A whole lot of you actually have been reaching out lately, and it's been awesome. It's been really cool to see this grow. And a lot of you have actually gone through and actually filled out and done your first investment with us. So I really appreciate that. Thank you so much. We look forward to working with you in the future. But if you're interested in any of that stuff, head over to fearfreepassive.com and we'll take care of you there. Thanks, everyone. I hope you have a wonderful weekend.